And look at that juicy trend here. If anything, we might get a dip by opportunity at around $40. We'll see what happens in the coming week. But that is one beautiful channel there. And that is, I'm gonna keep an eye on this one for a swing trade probably. I wouldn't want to invest in it here. I would want to invest in it in the next bear market, because clearly bear markets can send this from 74 to as low as $10. Let that one sink in for a second. So whenever the next bear market may be, I'll be there for it and I'll be ready. But that out of the way, I want to take a look at the financials here and why this one has my attention. Total revenue quarter over quarter since quarter three 2022, you'll notice it went from 500 million to 855 million, 796 million, 874.93 million in quarter two 2023, 789 million, and then finally, as of quarter four 2023, going into quarter one 2024, we're in the billion range. So this company is slowly but surely growing over the long term. If we switch to the annual, that much is clear as well. Since 2019, they've grown from 323.41 million to a high of 3.67 billion as of December 2023. That is incredible growth. But here's the best part. Ready? Let's switch over to the quarterly again. Let's look at the cost of goods sold. There's nothing I like more than a company that keeps their operating expenses and their cost of goods sold as low as possible. I don't like companies who sell hot dogs for $1 and it costs them $2 to make it. That's just never going to be a profitable business, because that's not even including operating expenses, because you're already selling the product at a loss. But with Dkng, you'll notice the cost of goods sold is well below their total revenue each quarter. And that is good, because here's a company. Here's an example. Believe it or not, there are companies out there, and I'm surprised too. There's companies out there that sell their product at a loss essentially every time, and that's, when are you going to be profitable? Probably never. Especially because we're not even including the operating expenses down here. So you'll see this company here, Nightscope, an AI stock, total revenue of 104 million, cost of goods sold negative 1.77 million. In their most recent quarter, 3.01 million in total revenue, cost of goods sold negative 4.93. So almost a 50%. Like they're losing money per every time they sell. They're losing money. That's bad. And that's not, again, that's not even including the operating expenses. If your friend tells you, "Hey, I'm starting a hot dog business, and by the way, I'm losing 50 cents per dog sold," and that's not including labor and operating expenses and everything else. Yeah, are you really going to invest in that friend's business? Probably not, unless you're really dumb. But like, the numbers don't lie, guys, is the point. And so the numbers don't lie here. Yes, the cost of goods sold is slowly trending to the upside. I am noticing that here, slowly trending to the upside. Here's what I'm seeing. If I had to plot this on a chart, here's what the total revenue looks like. So I'm going to use this red for total revenue. The total revenue over the long term is, if this was a chart, not a price chart, if this was a revenue chart, this is what we're seeing. It's slowly climbing higher and higher over the long term. And if we switch to a yellow, oops, not a yellow background, I need a yellow line. Yellow will be our cost of goods sold, so COG, or COGS. Our cost of goods sold is also slowly trending up, but it kind of goes sideways and then it goes up higher. Sideways action goes up higher. Sideways action goes up higher. And that's a good thing, because guess what? Our total, it's never going to catch up to our total revenue. We don't have to worry about selling hot dogs at a loss. Or in this case, this is a gambling site, so it's different in that sense, but you get the point. And this is why I like this company so far, just on the financials alone, just on those two numbers, the cost of goods sold and total revenue. Their most recent quarter, 1.17 billion in total revenue, cost of goods sold negative 710 million in cost of goods sold. Their gross profit 464.93 million, but the operating expenses is where we're going to see some pain here. The operating expenses, see, this is why it's important to keep your cost of goods sold as low as possible without cutting corners and delivering a good product, because the operating expenses will eat into all that too. You still have to take into consideration the operating expenses. It's not just all about the cost of goods sold. Operating expenses have been, wow, this is actually pretty good. Here's why. If you guys are watching the numbers here, the operating expenses have been going sideways. They've been going sideways. So if I were to pull up the whiteboard here, let's say this is operating expenses. I'm using my finger right now. If I were to plot this on a chart, let's pretend this is a chart again. The operating expenses right now, you'll notice, look at the numbers, negative 584 million. Quarter 3 2022, 600 million next quarter, 637 million next quarter, 433 million quarter 2 2023, 533 million, 532 million, and then the most recent quarter, 603 million in operating expenses. So it has never gone into the 700 million range. In fact, it's never gone up above 650 million, and it's never gone below 430 million. As of right now, if we were to plot this on a chart, we would have 4.3 million here, and let's just say 6.5 million up here. This is the best I can do, guys. Got to work with it, but yeah. So here is the operating expenses chart if I had to plot one out. This is what it's looking like. It goes up here, maybe goes down real low, and then it kind of just trades within a range, and maybe occasionally comes back up to 6 million, and then maybe occasionally dips to 4 million, and then it just goes sideways. That is essentially what's happening right now. It's just going sideways between 4.3 million and 6.5 million. And we can round it up probably. We can just say 4.5 million and 6.5 million. It's just trading within that range. Wait, million? 6.5 million? No, not 6.5 million. I messed up. Where is it? 500. Yeah, it's trading between 450 million and 650 million. My bad. I confused myself there, I think. But you get the point. It's going sideways. And operating expenses not increasing as revenue goes up, that is always going to be a company that will eventually become profitable as long as they keep up this pattern. As long as they keep their operating expenses going sideways like this, then let me just clear everything out here. As long as they keep the operating expenses going sideways and their revenue, there we go. And the revenue continues to go up like that. And remember, their cost of goods sold it's trending to the upside, but it's real slow relative to um, to the revenue growth. So that is what I'm seeing here. Again, I like it. I like the stock. I think it will eventually become profitable. It's just a matter of time. Slow growth is better than no growth, especially as long as they're keeping their cost of goods sold under their total revenue and their operating expenses sideways. And let's see what else. Let's see, where's their net income? Net income, negative 142 million. Yeah, they have not been profitable just yet. I think it's only a matter of time. Well, as long as they continue on the path that they're on, if something changes, then that's a whole nother story. At that point, you have to look at the income statement and balance sheet all over again and make sure it is actually a good decision to buy the stock. Who doesn't like a company that keeps growing, that keeps their operating expenses sideways over the course of years and years? Total assets to liabilities, they have more assets than liabilities, so it's already a win there. There's nothing to be concerned about. Yeah, debt isn't concerning. Book value per share, I don't even know if I can trust the book value per share. So the comment, yeah, shareholders would be screwed if there was company liquidation, but yeah, no. Let's look at the annual here before I let you guys go. 3.94 billion in total assets, 3.10 billion in total liabilities. Every year, the interesting to note that the liabilities every year they continue to climb. In 2020, they had liabilities of 807 million, followed by 2.39 billion in 2021, huge jump there. 2022, 2.72 billion, and then 2023, 3.10 billion. Whereas their assets have been kind of been going sideways here at 4 billion. So that's something to take note of. Yeah, that's something to take note of. I'll take note of that right here. So what's happening with the assets and liabilities is, oops, there we go. So let's say red is assets and green is liabilities. It should probably be the other way around. But liabilities right now, they're kind of going sideways. And you have, no wait, my bad, I screwed that up. See, this is why I shouldn't use green for liabilities. Okay, assets are going sideways. Okay, and liabilities right now are increasing. So over time, if that continues, we will see liabilities be higher than assets. Let's hope that's not the case, though. But that's essentially what's happening. But overall, I give this stock a buy. I give it a buy here. Their free cash flow is almost. They're almost at. Yeah, holy crap! Really? They have a negative 200, negative 22, negative 22 million in free cash flow. Holy crap! They're almost they're almost positive. They almost have positive cash flow here. They're like well on their way towards it. So that's another thing that I like right there. Now, I rarely look at free cash flow, but I figured let me just peep at it. Yeah, it's been they're well on their way to not only being positive having positive cash flow, but also becoming profitable. So everything's looking good here for DKNG. This is just on the numbers alone, the numbers that I look at. That is it for the video. I need to learn how to use this whiteboard better, but other than that, don't forget to like and subscribe. I will see you guys in the next one.